I'm not, because I was surprised that gold hadn't moved further, faster, earlier. My belief, and Trey, you and I have discussed this over dinner, my belief is that gold does well when people are concerned about the maintenance of their purchasing power in U.S. dollars. I've been concerned about that for a very long time. The arithmetic that concerns me is not expressed by the CPI, which I don't think is a good index. So I've been surprised by the muted response of gold hitherto. I didn't know, as you know, because we talked about it, when gold was going to move. But it seemed to me like an inevitability. As you and I both have talked about, I have a flaw in that I often confuse the words imminent with inevitable. But no, I haven't been surprised at all. Gold for me is insurance and savings. Gold stocks are investments. I don't own gold to make money. I own gold to maintain liquidity and maintain my purchasing power. I'm good at buying gold stocks. I've worked at it for 50 years. It's my craft. That's different. Owning gold stocks is one of the ways that I increase my store of gold. But they're different businesses. Gold doesn't require any work. Just like a life insurance policy doesn't require any work other than paying the premiums. So I regard them as very, very, very different asset classes. In a different part of my life, in addition to being an investor in gold mining companies, I'm a speculator in the juniors. And relative to other people, I'm actually a better speculator than I am an investor. I'm willing to do the work. I have 50 years of mistakes, but there are three different buckets: insurance, investment, speculation. I've participated in 3 precious metals bull markets in my life. This will be the 4th. And at some point in time, and I'm never smart enough to say why, you probably are actually, given your competence in technical analysis as an example. At some point in time, the generalist investor comes down into the precious metals market, having been attracted by gold's momentum. And then perhaps because of its unit cost, silver takes over the leadership. And when it does, as you know, it's truly, truly, truly dramatic. And although I don't need to make more money, I want to make more money. I really, truly enjoy the game. I'm 72 years old, and I want to experience that sort of quantum escalation at least one more time in my career, and silver gives it to me. When I came into business, I'm older than you, as you know, when I came into business in the 1970s, I witnessed an amazing silver market. The stuff went from $1.30 in 1970 to $50 in 1981. One stock that I was aware of, but I was too dumb and too poor to buy it, was Coeur d'Alene. It went from 10 cents, this is not a typo, 10 cents in 1970 to $65 in 1981. And that stuck, that stuck in a young man's mind. But I didn't participate. But as I think you know, in the later part of the 80s, the early part of the 90s, which was a spectacular silver market that people forget, I was involved in Silver Standard, which we took from 72-cent financing with a full warrant, thank you, to 6 years later, $45. And Pan American Silver from 50 cents, Ross Beatty was too cheap to give me a warrant, to $45. Those two moves, from below $1 to $45 in 6 years, stuck with me and have stuck with me forever. We are, I believe, coming into a precious metals bull market that will resemble the best of the prior markets, and if past is prologue, that same performance, I'm not saying $1.30 to $50, don't get me wrong, but that same sort of relative outperformance, silver to gold, and then silver stocks to silver, I think we'll see in this market, and I'd like to play it.
So you made the comment that you think we're heading into a very important precious metals bull market. So I'm going to pin you down, since we just went from 1,800 to 3,300, what do you see that excites you about the next 5 years as opposed to the past 3?
You got to give me the next 10, not 5.
Okay.
I believe that the analog to the deterioration of the purchasing power of the U.S. dollar that we're going to experience is the 1970s. In the 1970s, according to the Office of Management Budget, the U.S. dollar lost 75% of its purchasing power. This is not some old fat libertarian, Rick Rule, saying this. This is the office, the Congressional Budget Office. I believe that because of the accumulated debt and deficit, particularly off-balance sheet debt, entitlements, and the unfunded entitlement liabilities, that the purchasing power of the U.S. dollar over the next 10 years is going to decline by 75% again. I don't know how it'll be reflected in the gold price, but the easiest thing for me to say arithmetically is that the increase in the gold price will mirror the deterioration of the purchasing power of the US dollar. If that is more or less right, then the gold price goes up fourfold from here. People say to me, Rick, give your head a shake. Gold has already gone. It's already up 40%. If the analog is the decade of the 70s, let's assume that the move in gold price from $35 to $100 was a dead cat bounce off the restriction of the gold price. And let's say that the move in the gold price above 550 to 850 was morons piling on. That move from 100 to 600, six-fold move, is a pretty good move. And if the cause of it is the perception of the deterioration in the purchasing power of the US dollar, I think it's absolutely right to assume that the increase in the gold price, the increase in the nominal gold price, could reflect the deterioration in the purchasing power of the US dollar. Uranium, particularly when it's hated. I have a core portfolio in uranium, which has done extremely well. I had the good sense when uranium was in solid favor to sell enough that I had the rest of my position for free, which is great. About 6 months ago, the uranium trade fell into real hate again. People who had uranium as part of their internet handle were publicly bemoaning the fact that they could spell uranium. The stuff was way, way, way oversold, so I bought some. The hate dissipated, and that position, which I bought as a trading position, I've now sold. The reason to own it was hate. The hate dissipated, I sold it. The change in the uranium market, and your colleagues at SCP know this, the change in the uranium market is that pricing in the uranium market is migrating from the spot market to the term market, and that's profound. Uranium producers will be able to tell within 5 years how much they sell over a 15-year period of time and for how much money. What that means is if the other side of the term contract is an investment-grade counterparty, Southern Company, Duke Power, Tokyo Electric Power, you will literally be able to take that contract to the bank. The cost of capital in the uranium business will become the lowest cost of capital in any resource business on the planet. At the same time, the certainty which lazy securities analysts, you're talking to one, are able to forecast future revenues in the uranium business will be more clear than any other commodity. In other words, you won't have to shade your net present value calculation because you have no idea what they'll sell the product for. This is profound. This means that companies that normally, in a normal circumstance, wouldn't be able to build their deposit, they'd have to sell it, will be able to at least threaten the acquirer with the fact that they can build it themselves. They can obtain financing because the financing is going to be obtained on Tokyo Electric Power's balance sheet or Duke Power's balance sheet. This is hugely important. It's not sexy, but I'm a lender. I'm too old to care much about sex.
And how about the rare earths?
What I like about the rare earths is that nobody cares. I mean, nobody cares. They're not rare. Let's get that out of the way. They're not rare because, they're rare in the sense that we haven't looked for them because the Chinese produce them so efficiently. Two things. They're a geopolitical item now. People want to develop acquisition pipelines outside of China. So rare earths that could be utilized in Korean assembly or Japanese assembly or European assembly or American assembly, that is rare. The second thing is, and a lot of people know this, the Chinese have had an advantage in terms of cost because they've accepted extraordinary environmental destruction as a consequence of their rare earths industry. And that destruction is no longer acceptable in China.